What's going on, YouTube family? Welcome to Automotive Life. My name is Lucky, and today we're going to be talking about why banks are leaving dealerships and what kind of consequences will the dealerships face. Now, before I get into the content, if you could do me a huge favor and gently squeeze the like button if you enjoy the video content. It truly means a lot to me. I take time out already to make 2 videos a week just for you guys. So a small squeezing of the like button definitely goes a long way. Also, if you consider subscribing, I truly appreciate that. And once again, follow us on Instagram at Lucky Lopez, and let's get into the video. The automotive market has been an absolute roller coaster ride for the last 3 years. This all started back in 2020 when banks started lending way too much money on cars that simply weren't worth it to consumers that simply couldn't afford these payments and shouldn't have got the car in the first place. Now, what kind of consequences could have led from this? Well, now let's fast forward to 2023. We're seeing record high repossession rates, and we're seeing record high portfolio sell-offs where people are just liquidating their paper because they don't want to take on the risk of all these really bad auto loans because they owe too much money, people are not making payments, and they see the value of cars going down. Well, now we just had another major domino fall. I've talked to several dealers all across the United States, and every week I hear more and more people talking about this. Banks are starting to walk away from dealerships. Now, I'm going to explain to you how a bank and a dealership's relationship works. So I had to break out my props again because I know you guys love them. So when you're a dealer, you sign a contract with the bank that you're doing business with that you're going to abide by certain rules. What I mean by this is if I were to sell this G-Wagon to a customer and let's say this bank wants to buy the deal, I have to make sure that I get all the paperwork correctly done, send the customer out, and then I have to send it to the bank. The bank, therefore, sends me cash so I can pay off the car, and then I agree to send the bank the title within 35 to 45 days. It's a very simple relationship. Now, there are some things that you guys don't know about, which is called like first payment buybacks. This is when the customer takes the car, takes off with it, the bank funds me, I send the title, everything's good to go, but the customer never makes the first payment. Guess what happens? I have to pay the banks back all their money, and now I got to go chase this customer and this car for a repo. Now, this is just a small glimpse into what dealers have to deal with. Now, the big thing we got to talk about is auto loan portfolio performance. This is extremely important. This is how banks rate dealers. Now, if I sell a bunch of cars and the loans are performing well, the bank is happy with my customers, happy with my cars, and so they tend to lend you more money on vehicles. But what happens when your auto loan portfolio is not that great and it's not performing that well? Well, now the start's turning the other way. They stop lending as much. They start adding more exclusions, like instead of a one payment recourse, they may add 3, 4. If your cars are breaking down, they may require you to put aftermarket warranties on them or the car to have no issues within 6 months. Or the worst thing is your auto loan performance is so bad that they decide to totally stop doing business with you. And that's currently what we're seeing in the market right now. I've talked to a number of small and larger independent dealers, and they all told me the exact same story, just out of the blue. Bank of America, Wells Fargo, Capital One, Santander, all these banks started pulling back from them. Hey, we're no longer going to be doing any type of independent dealerships. We're pulling out of your state. All these banks heard multiple reasons. And some of the dealers I spoke to weren't even given a reason. They just went to go send in a deal and all of a sudden their name wasn't there anymore. So now people are asking why. Why is this such a big deal? As a dealership, you're only as good as the banks that you can lend with. What I mean by that is if you, let's say Wells Fargo was the one bank that you had that would lend on new cars with lower miles over let's say a $30,000 sales price, and you have 60 cars on your lot that are over $30,000, and that was the only bank that you were using, and now they're gone. Now you have 60 cars on your lot you got to get rid of because you can't have the banks, or you don't have the banks to finance these deals. Also, it happened to me. That was one of the main reasons why I decided to get out of the business back when I did here in Vegas, because so many banks were pulling out of the state of Nevada. We have some of the worst portfolio performances because everybody here likes to do drugs, gamble, drink, hookers, prostitution, whatever. Hookers and blow, that's the famous saying in Vegas. They spend all their money on everything else but their car payments. So a lot of the banks left the area. Well, now, after talking to these dealers all across the United States, I see a major trend happening. banks are, one, not lending what they used to, and some of them are absolutely pulling out. Now, the reason why I'm really harping on this is because this is something that's extremely scary and people need to pay attention of. This is the first wave of the lending apocalypse. This is where it's going to get harder and harder for people to get approved for regular cars. We spoke about this months ago on the channel, and now it's finally come here, where people cannot finance just regular cars. That's why tax season was so hard. Banks, just like all these loans we talked about, Bank of America, Wells Fargo, Capital One, Ally Finance, Santander, all were waiting for those big checks to come in to see what money they can get. And they knew that the tax season wasn't that great. People didn't have the big down payments, so they had to go ahead and walk away from these loans. A lot of these dealers, literally at the last day of tax season, were notified that, like I said, they're no longer lending. Now dealerships have less banks to send deals to. It's very important for dealerships to have multiple banks because this is what helps a competitive market go. So if I send you a car deal and let's say the first bank buys it at 10%, I send it to the second bank and I'm like, hey, they're giving me 10%, can you give me 9? I send it to the third bank, they give me, let's say 7%. Then I go back to the first bank and say, hey, you gave me 10%, these guys are giving me 7. Can you match it or beat it? Okay, we'll give you 6%. And that's what dealers do to get customers the best deals on financing. But when you have 10 banks, it's okay, you can pit them against each other. But what's happening now is these banks are pulling out at record numbers, and little by little, dealerships are gonna have nobody to pin these deals against. So what does that mean for consumers? That means that you're gonna have less competition from banks trying to buy your deal. So that means higher interest rates, higher down payments, and lower amount finances. All banks are trying to do right now is see how they can outrun their risk. How can they not take on as much risk from you as a customer? So what does that mean? Once again, they're going to want to give you less money for a car. They want you bigger down payments, more job time, more stipulations, a lot more headache. What does this mean for dealers? Dealers, now we can't sell the cars that we need to get off our flooring lines or off our inventory. And now we're going to be stuck with even more overpriced cars than we were before. Second thing, when these deals do go out the door, we're not going to make any profit. So we can't pay off the cars that we currently have on our flooring lines. Also, the big issue is they're going to be giving out what's called 1, 2, 3, 4 payment recourses, which means that they're going to make these dealerships basically be married to the deal. So I have to sell this car to a customer with bad credit, and I have to sell this car with, let's say, a 3 payment recourse. I got to pray to God that the customer makes their first 3 car payments, and then I'm off the hook. But if the customer, for some reason, doesn't, guess what happens? The customer gets to take off with the car and be a complete deadbeat. Me as the dealer, I have to pay the bank the money back. If I don't, they come sue me. They tell the rest of the banks that I'm a piece of shit and I don't pay my bills. And then one by one, the dealerships start losing all their banks. This is why this is such a big deal for dealerships to really focus up and listening to. Now, if you're a dealer and you're watching this, talk to your bankers. Ask them what's going on in your market. Ask about your auto loan portfolio performance. This is very important. Dealers don't ask this. Also, ask them if they're changing their lending criteria. I've seen banks overnight say, hey, I need 3 months on the job, we'll get the customer approved. All of a sudden, now they want 1 year on the job. Changing each little demographic on how banks lend makes it harder and harder for dealers to finance customers, because every car out there on a dealership slot has a certain bank and a certain customer slotted for it. But as that lending window starts getting smaller and smaller and tightening, it's getting harder and harder to find the right person for the right car, so this way they can make the deal happen, which is leading to even harder lending, and it's even leading to lower sales. So now we have customers not coming out anymore because the demand is pretty much dying off. People don't want to overpay. Dealerships can't get the money they need to get out of the cars because the banks won't lend it. Customers don't have the down payments to help bail out the banks. Everything is spelling doom and gloom for the automotive industry. But anyways, I would love to hear your opinions on the matter. What do you guys think about banks pulling out from dealerships? And we're not only talking about small independent dealerships, we're talking about franchise stores too, because a lot of the franchise stores that I've been talking to, their actual buying criteria is absolutely did a 180. They used to pretty much send people in with a pulse. Now they're offering a lot less amount finances. They're asking for more stipulations, and they're basically charging bigger fees, which is a buy fee or a discount to purchase these auto loans. But like I said, this is affecting all these dealers all across the United States. But I'd love to hear from you guys in the comment section below, dealers, consumers. What do you guys think? What's going on with this auto loan, basically apocalypse? Why are these banks pulling out so quickly? And what do you feel that's your next option to go out and get a good loan? Now, I know a lot of people are going to credit unions and trying to leverage their bet that way. So my advice to you is try to work with small local credit unions in your area, because the days of these big corporation banks dropping their pants and giving everybody amazing deals is over. The auto loan portfolio performance is absolutely going downhill, and the worse it gets, the harder it's going to be. I call it a credit noose or lending loose. That's exactly what's going to happen. Everything's going to get tighter and tighter. It's going to get harder and harder to lend. So if you're looking at buying a car, I know we're waiting for prices to go down, but talk to your credit union now. See if they have anything changing, if they're going to stop lending on cars. Do they have a certain dollar amount threshold? Because when I talked to this one dealer in Texas, so I'll mention his name, he was absolutely floored because he sells a lot of trucks between $45,000 and $65,000 trucks. 4 of his banks told him that they're no longer lending over $25,000. Just imagine what that effect has on his business. How is he supposed to sell these, great, solid 4x4 work trucks to his consumers when he has only 2 or 3 banks that can basically finance them? So his business is pretty much going to be dead overnight, and he's going to be struggling to find other vendors or other banks to take their places. But unfortunately, I don't think it's going to happen because everybody sees the writing on the wall. Banks talk to each other. When one bank is hurting, the other banks know it. And I promise you this, it's only gonna get worse. So anyways, I wanna thank you guys so much for watching. Stay tuned to the next video. I have an absolute banger for you guys this coming Friday. Hope you guys have a great one. We'll see you soon.